How can you manage risk if you're buying a new asset class like Bitcoin? When you decide that you're going to invest in an asset that's new to you, you might want to get in right away. And there's nothing wrong with that. Being anxious to get started is not a problem. However, you have to remember to start small. A famous investor said, start so small that you feel like you're wasting your time even investing in it. In other words, if you're considering investing $1,000 in Bitcoin, consider buying $10 at first, or even less. For me, just having some money on the line is enough for me to learn more about the asset. I get to be familiar with its price action and know when it's going through bull and bear cycles. If prices start to rise too fast, I can always buy a little bit more at a higher price and raise my cost basis. But again, I'll buy a small amount each time I buy to mitigate my risk. By buying small, I can build my position slowly over time. And this also allows me to protect to the downside. If you're talking about Bitcoin or even a precious metal like gold, you're talking about an asset that can sell off 20, 30, 40, 50% or more in a matter of months, weeks, and sometimes even days. By buying small, I'm protecting myself from experiencing a huge loss. And I'm also leaving cash on the sidelines so I can add more into the position as it sells off dramatically. Remember, long-term investing means a long time horizon. You're in this for decades, so there is no hurry to build a position quickly. By making small moves, you'll only allow yourself to make small mistakes. And small mistakes are always easier to fix than big ones.